And don't you just wonder now, did Amazon know this was coming and that's why they preemptively announced theirs? It really makes me think that they have
What had Ben Franklin said,
this,
three men can keep a secret if two are dead?
Exactly,
Yeah.
yes. So it's really interesting, because, Walmart's been encroaching on Amazon here regularly. Last time I was talking to you, I said, Amazon had peaked at 35 cents out of every dollar of new sales. Now they're down to 14. Walmart's up from 8 to 10 over the same time period. So they're getting closer and closer together of how much of those new dollars of sales they're getting. Yeah. Things like this keep Walmart in the game. And Amazon, it costs them a lot to do this. Walmart, it will not cost a lot to do this because they're using the jet model. And as long as they can box it up the way Courtney was talking about and get it out to the customer, their shipping costs will be low.
I do wonder, when Walmart bought Jet.com, you remember it, you covered it, $3 billion. I know a lot of people said they were gobsmacked. Mm-hmm. What the heck? Stupid deal. Maybe this is the best deal of all time.
Wasn't Mr. Lorry worth it?
Yeah. I mean, his knowledge and his ability to bring that, Jan's favorite word, omni-channel model to Walmart looks like a bargain.
It is true. And I asked him actually yesterday, I said, look, Mark, is Jet part of this? Meaning, like, are you using the Jet infrastructure to be able to execute this? And he said, not really. I mean, it's sort of Mark Lorry's knowledge, but it's not Jet really that's enabling Walmart to do this. It's the way that Walmart built out their logistics and distribution center, largely with his influence, that has enabled this to be a possibility. It's not something that happens overnight. This has been in process for a long time.
Walmart gave Mark 5 more distribution centers when he came there. He only had 3. So then, of course, he had 8 to work with.
Yeah, and a couple billion bucks.
It's his concept and the way to do it.
Agreed.
It's the Jet model, but now it's in Walmart.
I want to switch gears. We've got to move on to, obviously, the topic at hand, China trade. As you're talking about building out these distribution centers in America, companies, retailers, as you've noted, are probably furiously looking at how to change their supply chain situation in China. But that's not going to be in the short term. How long would it change a company? You're a 30-year retail executive. If I wanted to remove all my sourcing from China and move it to the U.S. or Vietnam or Mexico or wherever, how long would that take?
It depends. Isn't that all?
That's not the answer.
Think about this. Not that long ago, 50% of all apparel and accessories and shoes coming to the States were coming out of China. Today, that number is closer to 15%. That took place over about a 5-year period. So does it take a while? Yes. But there are other things you can do. For instance, if you're manufacturing product and you're selling some in China, you want to keep that in China anyway and just return it around and send it to China and bring the stuff out of Vietnam to here. So if you're Nike and you're still getting, 22% of your stuff out of China, that may not be so bad because you're sending a bunch of it to Europe.
But that's the stuff made
anyway.
in China for the Chinese consumer.
Some of it is. Some of it's made for Europe.
Morgan Stanley put out a note the other day. We showed it last week. I think it's worth showing again. The retailers that are the most exposed on an earnings per share basis, if and when the tariffs go from 10 to 25%, which they officially have, but they haven't kicked in yet. It'll take a couple of weeks. Let's show some of those names on our graphic. You can see Costco, 9% hit to EPS if they rise, but it starts to get bigger. And then you go to Bed Bath & Beyond. According to Morgan Stanley, a 76% hit to earnings per share if we get that 25% that really kicks in. Look at Lumber Liquidators, Jan. If you're going to consult with and advise those companies right there, what would you say to them?
Well, first you have to say you got to get the street prepared for what's going to happen, and then you start moving as fast as possible. But remember this, the real problem is not what we just saw. For my kind of retailing, the real problem will be if we put 25% on the next $325 billion worth of product that comes into the States. If that happens, essentially we wipe out growth in retail earnings for a year unless we can mitigate it. Mitigation will start taking place really fast now that people think it's a possibility.
And you're saying that's the problem because that hits all the apparel, all the shoes, the sort of main part of the soft line retail goods.
Correct,
That's
the people I
issue.
care most about. And that hasn't been hurt at all so far with the first 200, and it will be hurt very little with the next 15% on the first 200. But if it goes across to the $325 billion that hasn't been touched yet, all of retail has to start reorienting itself out of China or start selling stuff in China they're making in China or selling it other places besides the States and bringing the product that they're making other places outside of China here.